Okay, good morning, everyone, and welcome to Best Fall Trading Strategies. This event is brought to you by Timing Research and Trade Out Loud by David Kosmeter and myself, Anka Metcalf. With us today, we have great traders, and a lot of the traders today are futures traders. We have Damon that is standing by on the mic from futurespattrading.com. Yours truly from 11 a.m. At 12 o'clock, we have Matthew Buckley from Top Gun Options. We have Jake Bernstein of TradeFutures.com from 1 o'clock. And at 2 o'clock, Mark Sachs from RightLineTrading.com. But before we begin, let me remind you that all information provided today is for educational purpose only and should not be construed as investment advice regarding the sale or purchase of securities, options, futures, forex, or any other instrument of any kind. Trading involves a high level of risk and may not be suitable for all investors. You could lose money. Before deciding to trade, you should carefully consider your objectives, your level of experience, and risk appetite. Individual performance depends upon each person's skills, time commitment, and effort. Results may not be typical, and individual results will vary. You must do your own research and make your own trading decisions. Damon, thank you so much for accepting our invitation today, and welcome to Best Fall Trading Strategies. And if everything is all set on your side, you have the mic.
Okay, well, welcome. Good morning, traders. I'm glad you got up and got your coffee. And yeah, I was telling them I actually thought this was supposed to be 10 Central, so that's pretty funny. Until yesterday, I might have missed the whole thing. Okay, just let me get here. Let's see, share. I want to share this. Let me get set. Hopefully you can see everything here, right? Can you hear me okay? Okay, hang on one second. Okay, well, let's get started. I want to thank David and Anka for sure. I'm always glad to do something for you two. So this was, kind of fairly last minute for me. I've been pretty busy, probably because I've been busy. But so this is going to be a quick hour. I'm going to try to get a lot in because I know I can't go over because there's other traders waiting to get on. So I'm going to try to move fairly quick, but you can always contact me if you have questions. That's my info. And I left this up. We'll get into a little bit of my past. You can see my experience. I started in 1977, 42 years in the business. It's been a long ride. I started trading on the Mid-Am in 1979. I bought a seat, and we are writing the quotes on a chalkboard. That's how far back I go. So through my I'm going to just fast forward through my experience of 41 years. There's probably not much that I haven't done in the futures exchange. I held 4 seats, owned 3. I have traded on just about every market, just even abroad. I executed for many trading funds like Paul Tudor Jones, Toby Crable, Louis Bacon, but also Linda Raschke, which is oddly enough I'm just mentioning it because we ended up getting married. She was a client for 15 years. So now Linda is my wife for now 11 years. And, that execution, that part of my career was also very informative, even though I traded for myself through every, you can imagine for 40 years, one way or another, on the floor of the CME exchange, off the floor electronically, the executing of big funds like Paul Tudor Jones, or even long and short funds like the Ridex funds, gave me an inside look under the hood and of how these funds work, and because I used to execute for them. So let's move on. I'm glad that I don't have to go through this long risk disclosure. Thank you, Anka, for doing that. But the main thing is there's no guarantees on any of this, and this is to the best of my knowledge. All this, that I'm showing you, it's only my opinion, and of course, past results aren't not necessarily indicative of future results when past performances are mentioned. So it's a mouthful, especially when you haven't had your second cup of coffee. This is where I came from. I came from the CME. I usually draw a circle where I was standing during this picture, but it's still, you can't really tell. I'm just a dot in amongst 300 S&P traders. But very interesting times. That's how it looked back then. I'm just going through this for some fun, at the past, my past, and the floor was where it all happened. That's where the price action took place, and with the price discovery for the electronic markets came. And then the electronic markets, and that includes everyone that's out there watching this program, is that you're part of the price discovery action, not like the old days. This is over 100 years old. The exchanges from way back. I just throw these pictures out. Okay, I'm going to talk about a couple of things I use first before we kind of take a look at what the markets are doing and what I kind of think. It's all objective, and we'll get into that. But the one thing that most people know about me is I feel like volume is the most important indicator there is. Okay. And the good thing is you can get real time to the millisecond volume on most platforms. Now some of them have different ways of showing it. There are certain ways that I need to see volume, but volume for me is very important because it's the only real time indicator that we have. I mean, to the millisecond, you get to see the volume. If I made a trade, I see that volume in a millisecond. My own trade on there, I could see that. So, these other indicators are nice and they're supportive, but the only real time is volume. And on the floor, see these traders, you got to understand, the biggest edge they had was they can execute faster than anybody, which that's changed now because the playing field is more level. But they could see the volume. They could see if Goldman's buying and Shearson and Merrill Lynch, they're not going to go start selling. They're going to try to get on board. So you see the volume coming in when you're in the pit. You couldn't see that when you're trading from off the floor. So today we have a real advantage that we didn't have before. But volume is definitely something for me that if you see volume on breakouts, like on chart patterns, traditional breakouts, whatever it might be, and volume is coming in, big volume, and it goes through a trend line, that is a confirmation for me. Because when I saw, in the pit, we're making new highs, and I saw big buyers coming in, if I was on with Tudor and I was quoting them, or even Linda, I could say, look, we're making new highs. Goldman's buying 1,000, Merrill. There's a good chance that high is going to, continue to go higher, or if you get a little pullback, you're going to buy it. Okay. Light volume, though, on light volume days, the market tends to trade sideways. You get that consolidation that we've been seeing recently. We do a little balancing for a while, then we break out, and we do a little balancing, we break out. And so it's my 2 cents there. Let's take a look at how volume looks if you put it on for instance, this is a 5-minute volume candle chart from Photon Trader. And full disclosure, I'm not trying to sell anything. This is my own product from my firm, which, is my own trading, but I even stepped down from there. I really don't do the brokerage anymore. I'm just doing trading and education. 63, I decided to semi-retire and have some fun. But anyway, Photon Trader, these volume candles are a little different than like an Equal Volume or some of these other ones. there's an algorithm in the software that will widen the bar as the volume comes in. I need to see it personally. It's very important to be able to see it without me looking at the bottom, looking at the right. At that moment, I could see the volume coming in and breaking out. I'm going to keep moving pretty quick because I do have a lot of slides. Let's just take an example of this chart on top. And let me get some drawing tools in here. Always easier if I have an arrow here. So this chart here, that breakout here is the same breakout as this on this regular candle chart. Now, what is more obvious to you that we might get confirmation on this breakout, the top or the bottom? So you see the volume increased, and I just visualized me being on the floor and seeing buyers coming in. It makes me feel a little bit more comfortable that I could see this. Otherwise, you might be just taking a guess that we're going to continue. But with this is telling me we're going to move higher, okay? All right, so let's go to the next chart. Let's take a look at a 5-minute S&P, or actually this is a NASDAQ chart. Okay, 5-minute NASDAQ futures. And you could just see the continuation of volume coming in, higher highs, but even when we have a red candle, I want you to look at the volume size. So you're not getting a lot of love to the downside on these little candles, so this is really, really, for me, a visual. Now, on this bull flag, you can see how volume dies. And what happens once the volume dies and buying comes back in? Bigger candle and then continuation. Here's even a smaller, like little bull flag, huge volume, smaller one. So these kind of moves are, you almost can get away with not having too much more than this, but I'm not saying you shouldn't, but I'm just giving you an idea that volume is one of the most important tools out there. And take it from 42 years of experience and having plenty of ups and downs through my career. On Twitter, you might see me breaking up market profile into 3 different sessions. Now, I started breaking the market up dailies into the US session, Asia, and Europe. And then here's volume candles also showing you when Asia opened up, in this case, how very clearly it broke down. These little red dots, I'll try to get into it, but they're the reversals that I created that are on Photon Trader. It's a 3-bar reversal, and I don't reverse on 1 bar. I think they're big fake outs. You get chopped up, but you can see, pretty much straight down, roadmap, little bear flag, and continue lower. The reason why I really look at Asia and Europe is because after 2008, it really hit me crazy. I mean, I did very well with volatility. That, what happens overseas is very important. And when we had Globex and we were doing 24-hour trading, I mean, I was moving the market in the middle of the night in the old days, so I didn't feel it was really important. If anything, I was a fairly big trader on the night markets. Not anymore, because there's size on it and there's some volume. Not as much as the U.S. Day session, but it's very important to see what they did. Let's take a look at a daily volume candle chart from Photon, and I'm going to give you insight on some of my basic indicators that I like to use. So I like using moving averages, but I'm very careful with moving averages of how I use them. The basic concept of a moving average is good. If you have, in the old days, it used to be like, okay, if you had like a 9 and a 20, and maybe the 9 crosses the 20, you sell it. If it goes that, crosses below it and, goes above it, you buy it. But that can be very unproductive when there's sideways markets. You could get chopped up. So when I realized that, I tried a high-low band. a 30 high band and a 30 low, but I did test all kinds of different uh, periods back in 1986. I had a charting service as early as 1979 that I started because I learned how to chart really early on, and I just felt it was like I don't know, amazing, right? This a lot of, there wasn't that many guys doing it, and I felt like had a good insight into what was going on. It really helped me through my career. I charted all the way through, as well as ran companies that traded for myself. But anyway, so my charting service, though, in 1986, by then I was still hand charting, and I was adding up the moving averages. And like if you had a 10 moving average close, right, you add the last 10 closes divided by 10, and I would have to plot that dot. Of course, we didn't have computers like we have today where you could do this with just the press of a button, which is, for me, so much better, right? But I came up with a 30 high and 30 low. So the 30 high band is just 30 high moving averages average out 30 low. Uh, Now, when I mean 30 highs, if you took the last 30 highs, added up the last highs, the 30 highs on this daily, divided by 30, you would get then this stat, and then same thing with the lows. So it means there's more confirmation on the breakout. 2, I added a 10 later on in the years. I said, I need a little bit more help here. So I use a 10 close, which I've tried different ones. And, you don't have to get fancy. I did try everything else from EMAs and you name it, but the SMAs are just fine and they work great. So the 10, for momentum, and when the slope turns down, I have this turning down. I've got these red dots, then we're on our way down. And then this is a big sell, which, by the way, this is 100 points in 2 days. It doesn't look like a lot, but they're huge. So, and this is basically how I mark it up. Take a look at a crude chart. I look at things also with basic technical analysis because it still works. I'm along with other things that I might use, but you still have to step away and look at the basic chart. And if you look at this, after we had this gap here, the Saudi oil fields or oil refinery got, bombed, the market went up, and it's like buy the rumor, sell the fact. And then we came back, filled the gap, went all the way the other way. But this was like a little triangle down here. But I want you to notice that when it came out of it, I had this drawn, and I have this daily workshop, and I look at multiple charts live. And I said, this is a great buy because the 10's pointing up. We came out of this triangle with good volume, jump in, and, you could have jumped in there and you had 4 up days. Now this is fairly big. It's $4 in the crude. This was only a pullback to the 30 low moving average, and then the market continued higher. And as you know, the market's up here. If you follow, on the bottom, I use this 310 oscillator, which is the LBR 310 oscillator. I've used that for years. When Linda showed me that, that's her little creation, and I do like it. So now let's look at a recent chart here. This is, what is this? The 12th of the month. I'm trying to bring, I worked really hard to get charts even as of the close yesterday for you, because I want it to be real in real time as much as possible. Although it's Saturday, the markets are closed, it's still pretty relevant. So here's a 5-minute chart, and this is, how I look at this. And I call my trades out in this workshop, and they could see them. There's nothing I'm hiding, and whatever they want, if they want to follow, that's fine. I'm not, I do a 1 hour in the morning, the first hour call, and the last hour, and we'll get into why I do that. So here's the opening. You can see we started this move up. We're above the 30 high moving average, slope turning up. I got my little green dots. First time I got a little red dot, reversal. You could see volume died. So when you see volume dying at the high like that, and then you get a reversal, that was the first sell signal. And then this was the next one. And at that day, we actually went a lot lower. But I want you to notice these are 4 charts, right? They're all 5-minute charts, and you've got the ES, NASDAQ, Russell, and the YM. I like to have 3 at least out of the 4 indexes confirm a buy or sell signal before I do it. So if I'm waiting for a sell signal on ES and I get it, I want to make sure that, you know, the NASDAQ and let's say the Dow are in the same cell, or the Russell in the NASDAQ, because, you know, if there's 3 out of 4 chances the lagger, you know, the little straggler there is going to catch up. But if there's 2 sell signals and you're still in a buy signal on the other ones, that's when you stand aside. Stand down, go get some coffee, go make some lunch. So here's a 5-minute candle chart. Right here, you see this. You know, you had this big move up, little bull flag, and then volume coming out of the top of the bull flag. By the way, remember, volume confirms breakouts. And then we started a bull flag up here. So this is how the 5-minute looked. This is the daily that day. And this was before we broke out of this. Recently we broke out. Okay. And here you had momentum going up, which I didn't show, but you could see it here. And this is a 30-minute chart. Look at these huge candles. So it's always good to trade a time frame, a larger time, you know, look at the next larger time frame. Pick one when you're trading a smaller time frame. So you know, what I like to do is I trade off a 5-minute. I like day trade. I don't take anything overnight anymore because I'm too old for that. I like to enjoy myself after work, and you can when you have positions on. It's just too crazy. Anything can happen. But so I use a 5-minute and I use 30-minute for the short-term trend. So if the 30 minutes in a buy and I get a buy here, I'm all over it. And, you know, even if the daily's in a sell, I keep that in mind, but I keep the levels in mind because I do pay attention to levels. If you look at Twitter, you'll see I have a lot of levels. So here's how a daily would look. You know, first, you know, here you've got the PAV reversal, which is the dots that you see at a negative slope, you know. Oh, you know, let me get a little arrow here because I'm just running away with this. So, you know, you got a sell there, you got a negative slope, you know, here you got a positive slope, you got a PAV reversal buy. So if you were to look, you know, I kind of marked this up so we don't spend too much time, you know, going over this. This is how it would look if you add more into it, you know, the buy and sell signals. This is even more. And, you know, looking at this, for instance, this was giving me the heads up that we got sell divergences here. Volume dying. Well, let me, a little arrow. You know, so volume was dying there. And you could see right here on the bottom, lower highs on momentum when we were making higher highs. So it's just like a, you know, hello, like a yield sign that you see on the road. It's not saying sell it, but it's like yield, you know, maybe slow down your car or something like that. You know, construction ahead, you know, whatever it is. So, you know, the market really had a nice sell-off there. And so I want you to see the, you know, the big picture is we're looking like maybe in 4 months we had 4 signals, you know. So, you know, I really think people overanalyze, traders can overanalyze the market and they can't make an easy decision. Here's, you know, now I don't even know what I have on here. I threw so much at this, we might not even get through it, but I'm going to try. So here's something I put on Twitter, which I was watching the market, waiting for the 9 o'clock number. And 8:55, the market started selling off. This is something else I look at on volume. This what this demonstrates is the hitting of the bids that, you know, would be high red. You know, like you could see, 0 traded on the offer, 174 traded on the bid. Let me just grab my tools again, so you can see what I'm talking about right here. Now you see those zeros? Nothing traded on the offer. Someone came in and they swept the book. And I'm going, what's going on? I mean, the 9 o'clock number didn't even come out. Well, the market broke all the way down. We had 40,000 contracts in a 5-minute period. And then we open up, we go a little lower, and it was a bear trap. And it was really nice to happen to be looking at it because, you know, I caught it. But you could see over here on, you know, I pasted up, you know, how this would have looked on a 5-minute bar. It helps to have these candles because you see something's going on, you know, even if you don't have something like this chart, you know, which is a window trader chart, and it's you know, we have this working with Photon, uh, in our, you know, Photon servers are at the exchange, so you get really good volume, and you know, it's in milliseconds, right? And somebody said it looks like a hornet's nest. It does, you know. Okay, let's move on. So let's step back and let's look at a daily, um, pretty much updated. I'm like a day behind here, actually. A daily chart with monthly overlay. Okay, so you can see that volume, you know, really does help. If you look at it and you just look at the high volume areas, and you can see like right here, you know, these areas were real important, and you can see um, these tops, you know, how important looking at reversal bottoms and tops. And we went through here. This was actually in December 2018 when the Fed raised the interest rates, would kind of shocked everybody that they did it again, and they said they were going to raise it again, and you know, it was a dog pile out, right? Well, this is what the market's done since. You know, you could say we had a nice move up, and we're kind of like on 3 pushes for the most part, but we broke out of these highs, and now this is where we're at. I feel the market, you know, we'll get into it. I feel the markets are, you know, poised to keep going. You can't fight this trend, you know. So coming from the floor, let me tell you this: there is so many traders that, you know, I still hang out with and I talk. It's hard for me to talk to them because in their head, they're always looking for the crash. They're always looking for the sell-off. And I get it. I've traded all of them. I traded during the 87 crash. It was scary. And I traded that when in 1986, when I was executing for Paul Tudor Jones, he showed me his overlay of the 29 crash with the current chart, you know, the S&P chart. And I think it was an annual chart at that time, and made my hair stand up. And he can only say, you know, second half of the year he thinks it's coming. So while I'm trading the 87 crash, that's all I'm thinking about, right? But I've traded just about every kind of traumatic market, you know, so I get it. And most of them are down. And most sell-offs, or let me put it this way: sell signals, big sell signals versus big buy signals. Sell signals tend to be uh, you know, much more erratic, dog pile out, you know, and it's coupled with fear, you know. Oh no, we're going down. I mean, who is getting crazy about buying? It's very seldom you see crazy buy markets unless it's some kind of news blip or something. But generally, when we go up nice and easy. When we come down hard, and you can see this on this chart. There's a lot on this chart, but I'm going to get going here. So I also use market profile. Most of you guys, traders out there that follow me on Twitter, I just use my market profile. And I started putting this up in February. I'm not a social media guy, but Linda says, hey, can you put up your market profile charts with your levels? I just, you know, why don't you put them on Twitter and then I can see them? And I was like, I don't want to do that. I didn't have anybody following me, but I just did it. And it seems like there's some interest because I'm at 4,100 now in 6, 7, 8 months. But I put one chart up with my levels. But let's talk about market profile, because for the most part, you know, there isn't that much, you know, that many people I know that follow it. It's more of a cult, but it is getting more popular. But it started in 1985. So let's just look real quick. This market profile chart, you see these letters. Basically, if you were to break this out, this is a 30-minute market profile. This is how it would look. This is just a 30-minute bar. A is the first 30-minute bar, B is the second, C is the third. So this gives you a little idea what, you know, what you're looking at. I'm not going to give a big class in this because we barely have any time, but I'm going to try to at least give you a little insight of what it is. So if you broke this chart out into a bar chart, that's what you get. And this window trader chart, the high, the really bright red is the highest volume. And in this case, this is the point of control. But, if you're using volume profiles, use this as a point of control. And you can see that's where it traded a lot, but also the highest volume. And then this little square area, in fact, maybe I should do this because it is kind of hard to see. I get it, gang, I'm kind of tripping over my feet trying to get this up here for you. So that's the value area. And the value area is where, it depends on who you're talking to, but 68% to 70% of the trading takes place. And the idea is when it comes out of there, you get these erratic moves and you look at price behavior to see how it reacts. In this case, these are spike tops if you had a bar chart, but single prints is what they call them in market profile. All right. Let me do this here. So volume profiles. We don't have a lot here. You can read a lot of this, but basically, it identifies market interest at any given price. What the market's about is we're looking for signs all the time. Just like you're on a road. If you're on a dark road, you don't know where you're at. You're looking for a sign to say, hey, fork up ahead, whatever, Wisconsin, 80 miles, something, and that's what we do. We look at volume, we look at trend lines, we look at and we try to get all the signs to point in the right direction. We go for it. Well, volume, at any given price, it can identify if there's interest there. And of course, it helps support and resistance areas. That's where you see my trend lines, or not trend lines, levels on market profile. Gives you transparency of, who's participating, and we'll get into that a little bit in the market. And it confirms breakouts as well. Basically, the displays are, you're creating a database is what you're doing. And it helps you understand a little bit about what the market's doing. And I'm not going to get into a whole class, but it is an auction, okay? And that's how that all came about. By the way, market profile was created by Peter Stoudemire in 1985, I believe, when there was no electronic volume. It was all estimated volume. It was worthless. They took a 3-day estimated volume at a certain time divided by 3, and they put it up there. It was goofy. We all laughed at it because you couldn't really be able to see real-time volume unless you're on the floor sitting in the pit watching these guys. So by taking those letters A, B, C, D, that actually came from the floor, and those were time brackets that they put in the corner by the clock of the exchange. So when a trader made a trade in the first half an hour of the day, it would say bracket A on there. They wrote bracket A on their card. That's all it is. I will tell you, there's some people teaching market profile that don't even know that. Bracket A, it's not any, amazing, thing. It's just, that's how he put it together. He took the A for the first period and he would write it as soon as a price would trade, bracket A. If he didn't write it down, he would write it down, plot it on the chart. Okay, so here's how market profile looks. You've got, here's a market profile chart, the same one broken out in a 30-minute bar. This is how it would look on a candle chart, and then this is how it would look, on a volume candle chart. So I like looking at these two the most because they tell me quite a bit. All right, let me get this next slide going here. Okay, so here's another example. You've got two different kinds of situations here. You could see that where the market just took off, and this was the opening, never turned back, and this is like a scalping type of formation, but this is how it would look if you expanded it. And here's a bar chart with volume on the right side now. And these high and low volumes areas, right? are very important because they do attract and detract. So it's I use those as levels for myself. So you got peaks and valleys, to look at. Here's on. Okay, this is the 13th of November, not far, to show you how this looked. What my moving averages and looking at these charts, together. So let's just go over one thing about the market. Is a live auction. You hear that all the time. I I have to tell you, I had a liquidation company. I've been to over 200 regular auctions, not at the exchange. I mean, I used to go in there as a big buyer, and if I could buy anything 5 or 10 cents on the dollar, I would turn it over for 20 or 30 cents on the dollar. So I went into auctions, and I learned about auctions before market profile. When it came out, I had a better understanding what he was saying because that's what I used to do. So what happens in an auction is you're looking to find the fair value of the product, right? So the price gets driven up, and let me give you just a quick analogy. If I was selling a flat screen that retailed for $2,000, a 65 or 85-inch flat screen, TV screen, brand new in the box, and I had 100 people in the room, and I said, okay, somebody, let's start it out. So, who would give me 100? Everybody would raise their hand, right? Who would give me 200? Everybody would. By around 600, maybe you have 40% are still raising their hand because they're like, yeah, I don't know if I need it, and it is a good deal. And then maybe at 1,000, you're going at 50% off, but maybe 20% are raising their hands because they go, well, I'll just look for it. I'll buy it when I want to. But there's still some guys out there bidding the market up, and all of a sudden it goes to 1,500, and there's 3 or 4 left, right? Then they close the auction. Okay, so sold for 1,500. Now, if you look at that, the value area is probably around 500. Up to 500, everybody would buy it because it's a $2,000 screen. So that's where the value area is. Where the single print is going to be that 1,500, 2, 3 out of 100 bid it up to there, and that's where it closed. So what just happened? What happened is the next time they go sell another screen, maybe they have 10 of them to sell, so they do a second auction. When it gets to a certain point, these traders are going to go, well, I'm not going to buy it up at 1,500. Did you see it only traded 3 contracts? Maybe it'll go, and maybe it'll go up to 1,000 the second time up. So those single prints are really good resistance, or these spike tops, and I don't want to go too far into it, but I wanted to give you a little idea. So the longer term traders, there's 2 types of people or traders that control the market, types of traders. And this is a good way to understand it a little bit. If you break it down and you can look at the market and see who's controlling of the market at the time, then you can kind of gauge if your system's going to work or which system to use. So in other words, the longer term trader, those are the hedge funds, the Paul Tudor Jones, the institution, the Ridex funds. Those guys are looking to, for the most part, looking longer term. They're getting in now and they're going to get out in 3 days or a month, right? The short-term trader are the day traders, small 5 and 10 minute, signals, buying and selling, black box market makers. They go for 2 ticks, 3 ticks, small, short-term algorithms. These guys are trading in smaller, smaller time frames, and most of these guys, like the market makers, black box, they're just automated. There's just guys just watching the system go. My ex-partner and friend, he was the founder of Getco. They sold 20% of the firm for 300 million in 2008, and they started with $1 million. These guys are all electronic. They had nothing but systems going for a tick or 2 on every trade. So once you know that, then you can go, kind of gauge what to do and how to attack the market. So just, look at this basic little drawing on the side, just so you know. If you see that like squiggly line, you could draw a line through the middle of it. It's for sure it's a that day is traded by the short term, or is controlled by the short term trader. The one on the bottom is like a trend. You see these trends, you don't want to stand in front of it. You know, I preach on my workshop all the time. You have to trade with the trend. I mean, you know, I hate saying the trend is your friend because that's kind of, you know, old school and you've heard it a million times, but it is. And so trade in the direction of the trend. Linda will tell you that. Linda Reschke, we used to talk. Linda was a client of mine for 15 years before we got married, but you know, we always talk charts, even though I was on the floor. So here's like a situation where the bottom consolidation, that's where, you know, the shorter term time frame traders are trading back and forth until finally on the right side, that's when you start this trend with good volume. That's where you don't want to stand in the way. Okay, so here's two different types of looking type chart formations. This one is no doubt we opened up here and we kept on time framing higher, you know, like this. That's hedge funds coming in. It's not the little retail guys. It's not the 5 and 10 lot, even the 50 lot guys. You know, it's you're seeing big volume coming in, and when it's like this, and you have this bell curve, that's when you know we go up and we come back down. We go down, we come back up, and what do? We just trade around the point of control where, you know, the most traded prices, and it's like an attraction, you know, like a return to the mean, right? All right, I got to get moving here. I realize I'm moving pretty slow, moving as fast as I can. Okay, so this is what you see on Twitter. If you go at Damon Pavlatos on Twitter, you'll see my charts, and I give an explanation as much as I can with how many characters they give you. I think it's like 50. I'm not sure. But I break it up into, this is the US session, Asia, and Europe. And if you see that, it's really, for me, it's more, it tells me more, you know. I look at the highs that Asia made and the lows. I want to see if they respected it. Did they carry the flame? Because when you see a 24-hour chart, you really don't know. I mean, you know, okay, you go, oh, the highs in Globex are here and the lows in Globex are there. But I'd rather see the high and low in Asia and Europe before I start my day. So it really helps me out, and I'm going to try to move. So with market profile, and you could do this with regular charts, you know, you basically go from balance to imbalance, you know, out of balance. You know, that's when we come out of this like sideways market and we come back in balance. Just like this, you know, we were sideways 3 days, and you see that kind of formation. They call this like multiple distributions up. We're looking for the next place to trade until the market finally consolidates and says, you know, this is a good place to a fair value, and it trades there for a while, and then we come out of there. Okay, so that's how the market is. You know, it's not going to go straight up every day and straight down every day for too long. You know, there's got to be some profit taking. There's got to be some, you know, chilling out, you know, and just trading sideways. Here's just another chart. You know, so I kind of look at this and I try to point this out a little bit on market profile. I got to tell you, you know, Linda, you know, if I don't put it up, she's like, you didn't do your chart yet. I said, I'm doing it. Give me a break. You know, sometimes I wake up a little late. So here's just another good example, you know, where we just kept moving higher. Okay. Nope. Okay, there we go. This is, you know, that one day where the rumor came out that we, you know, I don't know, it was one of the trade rumors, right? So you see this all the time. You didn't know, you know, what he was going to say. You know, Trump was going to make an announcement the next day, but you heard the rumor, and then boom, the market sells off. But what happens is once you hear what the rumor was, even if it wasn't good, you know, and it materializes, the market usually returns back up. And for the simple reason that the unknown is worse than the known. So sell the rumor, buy the fact. You've seen that, you've heard that before. Here's, this trend that we had back, I don't know, when was this? Back in June. I have some different slides. You can see the market moving up, Asia, Europe, continuing, carrying the flame. There's only a couple days where the market, didn't, until what do we have here? Now, climax. Usually a trend ends with a climax. And this is after a 7-day rally. We took out that high, and then this is definitely, big funds coming in. The longer term time frame trader came in, sold it down just to get back to around this area. Okay. All right. All right. I hope you guys are doing good. I'm trying to move in fast so I get everything in, because I went a little crazy, I think. So here's a good example how when you have a rally, and you can see it in market profile, and you can see where you keep balancing. This is the point of control. And also the point of control where it's traded the most, is, it's almost like like steps, like, you're going up steps, that's the point of control until it starts to go sideways. But also when you come back up into where the breakout area came, it's pretty evident for me on market profile more than anything. So I like looking at, past consolidation if we're trading up to it, and it tells me, hold on to your horses. We're running into a brick wall, or something. It gives you a little bit of a kind of a warning. Okay. All right. Let's see. Like a surprise, I don't even know what I have on here. I threw so many things in there because it was the last minute for me. This is just another example where we rallied all the way up, and that was a big rally. And what do we do? Right back where that consolidation was, we ended up trading up there. And so you could be looking to sell into it, and look for a pullback lower after something like that too. Just the way I mark up things, you could see we had a really nice break here. And usually, you want to look at the highs and lows of Globex. And for the most part, the US session the next day, right here, we pretty much test either one side or the other, sometimes both in this case. But we don't like leaving new highs, usually contract highs, to the Asians or Europeans. It's like, we come in and we take them out, and then we decide what we're going to do. Like in this case, we sold off, closed about here. Asia and Europe could not take out that high. There's a failure there on the opening, and we just went straight down. So this in combination with all my other charts is what I like to use. Okay. You guys still awake? You get some coffee. I need another cup. I know that much. Real quick, gaps. There's this big confusion from way back. That we got a gap, we got to fill it. That's old stuff. You don't have to fill any gap. And from my past experiences, I don't have any. I never kept stats because I traded for myself. I didn't share it with anybody, but I'm sharing it now. So I can't give you stats, but from my own past, and current, trading or, charts I've studied, is that gaps, if they're small, generally we will trade in the direction of the gap and maybe fill it, but at least trade in the direction of the gap fairly early. If the market's extremely strong and it gaps higher, there's a good chance it might not fill it for a couple of days. So don't get too excited about it, but we may gravitate towards it. So this is how the market looked before on Thursday morning. I drew this up. And, you see this consolidation here, right? And we pretty much came out of that consolidation, and then we got this extension. Okay. Okay, I'm gonna have to move a little bit. This is how it looks as of Friday on the close. You can just see that, when we took out that high, we couldn't fill that gap. We got really close. We did try, but we couldn't fill it, but we got close. So let me show you, like with my moving averages, you can use them on for those who are stock traders. Here's Apple, Google, Amazon, and Microsoft. These are monthly charts. And I do look at stocks as well. If I'm trading NASDAQ, I surely have at least these 4 up. But these are monthly charts, and you can see that we've just been in a flat out buy with only a pullback in December. But it's very evident on here because we didn't go, we didn't close below the 30 low, and you're talking way back in this chart starts from 2016. Same with this. Here's weekly charts in the ES, NAS, and Russell and YM. The reason why I'm showing that, I'm getting to the point that we are in a extreme bull market. Here's the dailies. When we took out this high here, and you looked at the other longer term chart with the monthly volume overlay, the measurement, unless there's some crazy news, I don't know, they impeach the president, whatever they do, the president, if he got impeached, that might change things for sure. But the market is extremely bullish. And every time I don't know how many times I would say, look, I still think it's going higher. And they're going, oh, it can't, da, 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 da. And why? Because they're looking at these overbought indicators. Even this one right here, which is the LBR one, it's just overbought, but you can't trade off those. They're just like helpful, if you want to call it helpful tools. So if you look at on the volume candles, you can see where I marked up also. This is where we had a breakout there, but we actually had a buy. We started to buy right here, but this was when we broke out of the trend. That's where I had a buy signal, but this is where we confirmed it, and you can see volume and the extension of the volume, and all 3 of the 4 are definitely taking off here. Okay, so I'm really bullish. I'm looking for first big stop is around 3160. It's just my projection, but look, this is only an opinion. That's just but I've been calling this for quite a while. It's like at some point you'll have some issues and be wrong. But so here's the 3 o'clock close, and I want to talk about this really quick, and then I'm going to have to move it. But you guys can always join me at my workshop if you want, or email me your questions. So this is the close. I used to fill for the long and short funds for the imbalances. People don't understand. I mean, I would get, in order to buy as much as 3,000 or 4,000 big S&Ps on the floor, and I had to do it between 2:30 and 3 o'clock. And the 3 o'clock was the 3 o'clock close that was marked for the investors for these long and short funds. So my ability to fill it with an average lower than that was critical for me to keep the business. So I know what these are. I watch the flow and I go, here they come, there they are. And so it's just something that I can't get into too much, but look at these 4 charts. It's very evident. This is a 5-minute chart, how the volume came in. Here's basically a yearly volume chart, or a weekly chart with year volume overlaid right here. But I can't get too much into this, but because we're running out of time. But now I want to show you though, real quick, this was the close on Friday. Look at the volume, and this bright green means aggressive buying, but look at the aggressive buying. We closed on our highs. That it wasn't bullish, and you can see how this looked on this, and then this is time and sales with filtering out 10 and above here. Okay, so 10 and above contracts, I want to see here. I have it clear out every 5 seconds. And this is like 7 seconds before the close. Look at the amount of buyers. These are all lifting the offers. This is lifting the offers. Look at the size and look at how much volume, and we closed at the top. This is a very strong market, and those were long imbalances. They had to be hedged into the market. So that's a whole class in itself. But I do, there's a first call and last call that I do with my workshop. The last call is so we can watch these the last hour and try to catch them because they're great moves. All right. Well, I'm not going to go into rules and all that, but, basically, real quick, you got to be flexible to see multiple choices, when you're looking at things, make choices based on your own analysis, research, you can try to learn from somebody, but do your own research and analysis on whatever you learn and make sure you like it works before you use it. Make sure you understand the risk, that you're associated with every choice you make, and and reassess the risks, inherent to the, whatever the climate is out there. If you're watching, all kinds of news, coming out, make sure you always have a stop with these tweets and things. It's very important. Know who your opponents are. That's where the long and short funds come in. And we're always looking to learn in the market. This is just like on my workshop, I put up kind of like one screen, and because it's hard, to show everything. But if anybody's interested, I do the 8 o'clock to 9 o'clock in the morning, 3 days a week. For a whole month, and that's like $149 if you wanted to watch and log on, and you could follow the trades if not. Or I do the last hour, which is from 2 o'clock to 3 o'clock, and that's where we look at the funds, see if there's long and short funds coming in, because those are completely different and they go against the grain of most traders. Here's some information if you wanted. I'm not trying to push future path trading or brokerage or photon trader, but I see some questions up there, and I know that I get some questions about it. So you can take a snapshot of this if you want to ever try photon trader or open up a brokerage account. And you could go to DamonPavlatos.com. I just threw a snapshot up there if you did want to join. Basically, you're getting 12 hours for $149 in the morning, or 12 hours a month for $149 in the last hour. If you do both of them, it's $249. But I'm putting this up because I'm a terrible salesman and I never do it. And I always get kind of scolded for like, why don't you tell them what you're charging and what you're doing, Up on the left, that's my assistant. You could see I trained my dog to help spot good moves. And that's my information. I want you guys to reach out to me if you have any questions. There's a lot on there that I cover that I'm sure you got some questions, because I only have an hour. So I'm glad that I was able to be on here this morning. And, David and Anka, they're awesome friends and people, that traders. And so they have a nice service, and it's really nice that the internet came into play where you can watch all these videos and these webinars, because in the old days you had to see Linda or myself at a trade show, get up, fly somewhere, and this is really great information. And I want to thank you guys, and I wanted to be right on time for a change, which is rare for me. It's 9:59. If I hope you enjoyed it. So we'll see you some other time, or you can contact me directly, and I will answer questions. Okay, Anka, thank you, and David.
Thank you so much, Damon.
Thanks, Damon. Great presentation.
Good.
Yeah, so guys, if you want to get a hold of Damon and his services, it's at DamonPavlatos.com, and also his Twitter. You can find him on Twitter. It's Damon Pavlatos. And if you want to email him, it's Damon at fpt. I'm sorry, it's fptptrading.net. All
That's
right.
okay.
Thank you,
All right.
Damon.
All right. Thank you.
It's been amazing. Thank you for the great presentation and for this amazing insight into market profile. And it's amazing.
Okay, good. Thank you. And, I'll be watching your other guests. Okay, thanks.
Okay.